Hi, this is Michael O'Leary again from Buy the Book Taxes. I'm here to speak today about installment payment agreements. Last week I did a brief overview of 3 of the different options for resolving your tax debts: installment payment agreements, currently not collectible, and offers in compromise. But I did a very brief overview. For the next 3 weeks, we're going to do a a longer look at each of these 3 things. So today we're going to talk about the installment payment agreements. There are 4 different types of installment payment agreements that you can enter into with the IRS. They are the automatic, the streamlined, the regular, and the partial pay. The automatic is the easiest. It's if you owe less than $10,000 to the IRS. If you ever see those TV commercials where they say, if you owe more than $10,000, please call us. There's a reason that $10,000 is the break point, and that is because if it's less than $10,000, you can set it up yourself very easily. Couple of conditions, few conditions. You have to be willing to pay it back in less than 3 years, 3 years or less. You can't have owed any tax or had any prior agreements in the last 5 years. The way to do it, you can go onto irs.gov, complete form 9465, and submit it electronically right on the IRS website, or as part of your tax filing, you can make 9465 as part of your submission and just e-file your tax return. The good thing is there's no personal financial statements required. There is a setup fee, which they will take out of your first payment. It's $120 if you're going to be mailing them checks. It's only $52 if you give them your checking account information and they set you up on a direct debit monthly payment. That's the best way to go. Less than $10,000, pretty easy. Okay, the next one is also pretty easy. It's called a streamlined installment agreement. Excuse me. Now, one thing that's a little weird here, you have 2 different areas within the IRS that do collections. You have what they call field offices, which might be your local IRS office. Somebody in your local IRS office is contacting you or sending you letters attempting to collect the debt. Or it might be a group called Automated Collections, or ACS, and they're located around the country in different regions. I'm in Connecticut. I think the closest ACS area to me is in Philadelphia. And they have different breakpoints for what they can do streamlined installment agreements. For the field people that are out locally in your areas, it's $50,000 that has to be repaid in 6 years or less. For the automated collections people, it can go up to $100,000 and can be repaid in 7 years or less, 84 months. Once again, you can't have owed any tax in the last 5 years and have no prior agreements. And the thing that's good is you do not have to submit a personal financial statement in order to get these, as long as you have the ability to pay in full, either in 72 months or 84 months, depending on whether it's a 6-year or 7-year, 50K, 100K balance. That's it. Call them up over the phone. You could set it up. Best thing to do, give them your checking account, and it's just like any other monthly credit card payment you have. they'll hit the bank every month. Okay, the next grouping is what we call, the next option is what we call the regular installment agreement. Now we're getting up there in dollars, and the taxpayer is not able to pay in full either in the 72-month or 84-month period, but they can pay within the 10-year statutory time period, which is basically the legal period that the IRS has to collect tax from taxpayers, which is 10 years from the assessment date. The assessment date is typically when you file a tax return. They process the return, they assess the tax, and then they start collecting. For these levels of payment and this time frame, more than the 6 or 7 years, they want to see a personal financial statement showing your monthly income and your living expenses. There's a term of art here called allowable living expenses. When they say allowable, that could be some combination of your actual or either standards, local standards, county or region, or national living standards based on statistics from the Department of Labor that vary by expense category. So for one expense category, say like housing, you may be using the your actual expenses. But for another one, like transportation, you might be using a local standard. I'm just using examples, nothing specific here. So it's not just your actual living expenses. The Department of Labor, national or local expense standards come into play when you're doing a regular installment agreement, which is why you need a tax professional to help you complete these forms, the 433A or the 433F. Most people would not know these distinctions and would put incorrect dollar amounts in, and your payment agreement would get turned down. So you need to hire a tax professional like me who understands these things and can walk you through it and get the right numbers onto the forms so that your payment agreement gets approved. The last one, the fourth one, is what they call partial pay agreements, where not only can the taxpayer not make the payments within the 6-year or 7-year time frame, but cannot even make them within the 10-year statutory collection period that the IRS has. Once again, complete the personal financial statement, 433A or F, apply either for the expenses, either the actual, the local, or the national standards. The IRS will accept a monthly payment plan, and then they will revisit you every 12 to 24 months to see if your financial situation has improved to the point where you can start paying more per month and maybe convert your partial pay agreement either to a regular installment agreement or maybe even to a streamlined agreement. If you have any tax problems similar to what I'm speaking about, you have prior tax debts, or you even have unfiled 1 or more years of unfiled tax returns, please call me. I'm happy to help. I can help you get straight with the IRS. Thanks a lot. Talk to you next week.